Welcome to yet another webinar, another FX Educast webinar, another QTime FX webinar, another webinar with your host, Munther, Marji. How are you guys? How's everybody today? I hope you are doing great. I hope you had wonderful trading since we said goodbye 21 hours ago, and that you are ready for more. You're ready for more trading opportunities, just like the ones we introduced yesterday, and some of them reached the limit, and I'm very happy about that, of course, because I want you to make a profit all the time. How's everybody? Let me know. Write your comments. Let me know what you have been doing for the past 21 hours. How's your trading going? And of course, if you are interested in any instrument that you want me to take a look at, I will do that with a smile on my face. That's the agreement we have. So, guys, first of all, of course, I want to remind you that this free webinar is sponsored by QTime FX, our favorite broker in the whole world. The broker that was awarded the prize or the award for the lowest Forex spread broker of 2018. The broker who's offering you less than half a pip on major pairs like euro dollar and dollar yen with zero commission. Of course, a lot of brokers offer very tight spreads, but they make up for that with commission. No, not QTime FX. We don't do things like that. We give you the best spreads, and we do not try to mess that up with commission. And above that, of course, we have our current offer, our very attractive offer, which is doing great. And a lot of new traders are taking advantage of this offer. Opening your account will give you the chance to get a bonus, a real green money bonus. Not trading credit, guys, withdrawable bonus of $500. So what are you waiting for, guys? What are you waiting for? Come on, join the fun. Okay, so join what we are doing here. We're having a lot of fun. We are trading, we are making money, and we are enjoying the bonus. Of course, everybody who's opening new accounts is going to enjoy this bonus. If you want any help in opening your account, if you have any questions, please contact us at fx_educast via Telegram, and let the fun start. Okay, so with that out of the way, let's start talking about the market. First of all, as always, it is the euro. The euro, guys. And there is not a lot of change on this front because the euro has not changed much. But even though, before I talk about the most important levels, I want to give you some piece of information and observation on the chart that you can see, which is that now we are trading just a little bit, even if that happened horizontally, just a little bit above the falling trend line from last Monday high, and also above the moving average band on the hourly chart. As you can see, let me make this clear for you. This is the moving average band. We tried to break yesterday. We are trading above the bottom of this band since yesterday, a little less than 24 hours. So this is great, this is good, but the move is horizontal yet. I need to see something serious to the upside, okay? And this is the main or the number one observation on the euro dollar chart. Of course, we have been talking about 109.95 for a long time now. If you were here yesterday or last week, you would remember that 109.95 is our start support for the time being. So it is the number one support for now. Why is that? It is the Fibonacci 61.8 for the whole recovery attempt from October 1st, 29-month low. This is the move I'm talking about, guys. This is from here to here. Okay, sorry. Okay, so this is the move, guys, I'm talking about, and the Fibonacci level is at 109.95. Okay, this by itself is a great reason. It's a strong reason why we should pay attention to such an important level. But that's not all. If you take a look at recent history, you will see that we have seen resistance on the way up when we were trying to recover, when the euro was trying to recover from the losses seen this summer. On the way up, we found resistance around 95, and yesterday I counted the daily highs and lows around this level. For example, October 3rd high is 999, October 4th high is 999 as well, October 5th or 7th, sorry, high is 1001, October 8th high is exactly no, it is 96, a pip above that, 996. We also have 91 on October 9th, and again during the agent session for October 10th it was 93, and after this push to the upside when the price started falling, we got to 1001 on the 10th of the month, and we got to exactly $1.10 on the 11th of the month, and we tested this support. Of course, it was a resistance here it became a support on the 15th of the month when the low was 989. All of these daily extremes, guys, make it even more important than it would have been had it been only a Fibonacci level. So it's a Fibonacci level with obvious, extremely obvious horizontal support resistance area. Not only that, the whole thing is happening very close to what? To a psychological level, which is the $1.10. That's of course a psychological number. When we get very close to this level, traders are going to say, well, we are above the 110, we are below the 110, so it plays a lot in the psychology of trading when we are around these levels that end with zeros. So here you have it, guys. Not a lot of change on the euro front. The star support is still 109.95, and that will not change until we break below this support or move higher to be very far away from it, and that did not happen yet. But we do hope that the euro will respond to trading above the falling trend line from last Monday high. This is something good, even if it was done in a horizontal way. Not a lot of strength in this move. We want to see strength, and that is why the initial resistance for today is yesterday high 1043. So I want the price to break above 1043. This would be a sign, some confirmation for breaking above this falling trend line. So above this trend line, that's good. Above yesterday high, this is even better. And this is what I'm waiting for today. I really hope it happens. But if it does not, then the chances of testing 109.95 would remain, and of course that test will be very, very important. If we see this test, I want you to pay a lot of attention to it, a lot. Okay, look for any signs of reversal or continuation to the downside. The price could signal a reversal there. When you see the price getting closer to 109.95, please take a look at everything you can take a look at, everything. Okay, indicators, candles, different time frames, everything. And if there is a reversal sign, if the chart is telling us that there is a good chance for reversal here, that reversal could be one of the best trading opportunities of this month. At least of this month, maybe more than that. But of course, if the bears show enough strength to take us below 109.95 with a good number of pips, minimum 20, I prefer even 30 pips below that level before giving up. If the bears show that kind of strength, then we have to say that 109.95 did not survive and the drop will continue because we are already in a drop. A continuation of the drop would be telling us that the trend, the current trend of the market to the downside is still going strong, and we do not have any business waiting for a reversal around 109.95, which would be, in my own opinion, a surprise. It would be a personal surprise to me if we cannot find support around 109.95, because everything on the chart says that it is an important level. And if the price did not respect that, I personally would be surprised. I hope I will not be surprised. Why am I taking sides in this fight? Yes, I am, but not because I like one currency and hate the other, of course not. Because the chart is telling me something. It's telling me that this is an important support from which we could see a strong reversal to the upside. And usually, when you spot support that meets the requirements for strong and key support, and a reversal happens around it, usually that's a good trading opportunity. So when this happens, I don't usually target 30 or 40 or 50 pips. I target 150, maybe 200 pips, something like that. So definitely that would be more attractive to me as a trader and to you guys if you are following these recommendations. Yesterday, what did we recommend yesterday? I think we had a buy at 10.38, right? Did we talk about that or not? Do you remember, guys? And we said, of course, if we drop to 109.95, that is also a reason to buy. Of course, as you can see, we are very close to that entry level. We did not make profit or loss on that. Maybe 3-4 pips of loss or profit, depending on when did you close it. But in all cases, no major profit and no major loss on the recommendation to buy at 10.38. And with this, I want to take a look at the chat. Generally, I don't think that is English, guys. I'm sorry. I only speak English and my mother tongue, which is Arabic. These are the two languages that I can speak and I can understand very well. I'm a very, very beginner when it comes to German and Italian. These are two languages that I like, and I'm trying, when I find time away from the market, to learn a little bit, but I'm still a real beginner. You know, I don't understand maybe 1% of the language, that's it. So this language I don't even recognize. So if anybody can tell me what this language is, I would really appreciate it. And if anybody can translate what Jelly is talking about, I would be happy to respond to that. Oh, Nick seems to speak that language, right, Nick? So you understand what she is saying. Hey, Nick, how you doing, buddy? Thanks for the shout out. Ram Heinz, hey, how you doing? And Michael, everybody here, thank you very much for being here. All these names, except for generally the first name, are names I recognize and see every day. And I want to join you guys on the chat today. So I'm using my phone in order to join the fun that you are having, and I will be leaving comments every now and then when I will start with this. Hey guys, good trading and good luck. That's how I salute people. I don't say hi, how you doing, good morning. Say good trading and good luck. Of course, we need luck. You need luck in everything in life. A little bit of luck is something that can help you achieve good results. Sometimes you lack just a little bit of a push in order to achieve something really great. Sometimes it comes and you are very happy. Sometimes it's only a split second thing that separates you from achieving something beautiful and strong. So this is it for the euro, guys. We are really interested in 109.95. If you see the price there, I want you to be the analysts that you are. I want you to be super smart. Open both of your eyes. Keep them both on the chart and look for signs of reversal. If we see signs of reversal there, that means that we could be in front of a real good opportunity to go long on this pair and make some good profit. Now, what if we break below 109.95? I'm sure you guys want to understand what does that mean. And of course, if we do, that is a weakness sign. And with such a weakness sign, there we still have support at 109.53. That's another retracement level, 71.4. I remember it from calculating it earlier. It's one of the retracements. Yeah. So actually it is 66. Yeah. We still have this level here, but it does not look really strong. So with a break below 61.8, we could be heading to a new trend low. A new trend low, of course, what I'm talking about is that below October 1st low, which is according to the chart I use. Of course, it's different, 1 or 2 pips between this broker and that broker, or this chart and that chart. At the chart I use, it is 108.78. So breaking 109.95 could be the first step towards reaching a new trend low below the current trend low of 108.78, which was seen almost 6 weeks ago. So we'll be going back to that if we break 109.95. This is it for the euro. I usually spend the first hour in full talking about the euro, but today because of course we don't need to talk a lot about it, because there is not a lot of change since yesterday, or even since Friday, not a lot of change in the price. We are currently trading very close to where we were trading yesterday when this webinar talked about the euro 24 hours ago. So not a lot of change, guys. The only thing that changes that now we are trading above the falling trend line. We need to see this happen. We need to break above yesterday high 43. So I am going to issue the euro signals and then move to another instrument. So buy at, of course, 43 is the resistance, huh? So I want to buy, let's say, 10 pips above that. Honestly, since it's the euro and it's very lazy, and recently not a lot of price action, I would go for only 5 pips above that. I know that's very close, but it's this is what I really feel like doing at this point of time. So buy at 10.48. Another buy is another buy is of course at 109.95. I would absolutely take a chance there, absolutely. And the short would be, let's say, 30 pips below that. So we have a sell at 109.65. Now let's talk about the stop and limit for each of these recommendations. Buy at 10.48. Of course, I I will use a relatively large stop. It's not very large actually. It is just a little bit above 80 pips, just a little bit above what we are used to. So it is fine by me to use the same stop for both 109.65, and I'm going to use the same stop here also. Stop at 109.65. That's great. So up until now, we know where to stop our long positions. Fantastic. This is what, 83 pips? And this is only 30 pips. Yes, this is a fantastic position to get in. And why is that? Why are we using only 30 pips as Thank you for that, buddy. You know, I'm a big football fan, and I love certain teams very much, and I really like buying these jerseys and wearing them all the time. So this is, of course, the German national team jersey. Beautiful football. Of course, it depends on your taste when it comes to football or sport in general. Some people like, you know, individual playing teams that are headed with a mega star, while the rest of the team is, you know, not as good, and the whole focus is on the star, while others, of course, like the teamwork, like I do, like seeing a whole team that is strong, that's very strong, that a team that plays with its head, like the German national team. I love seeing them play, and I've been a fan since I was 13 years old, which of course means 5 years ago, right, guys? That was actually 33 years ago when I started being a football fan of Germany, and I still am to this day. I love the team very much, and I watch every game, every single game. So I'm glad, Michael, you like the jersey. This is a cute, very nice comment that made me smile and made me, of course, have this very nice conversation with you. And after that, of course, we're going to continue talking about the euro. Now, Nick, we have two Nicks today. We have Nick with a C and Nick without a C. So Nick Spirit, without a C, is rooting for the Bears, guys. He's telling us to sell. Well, of course, buddy. If we break 109.95, that's a sell. But I don't really think that having this kind of price behavior, just look at this, Nick. Look at this, buddy. Look at what has happened around 109.95 on the way to the upside, and then again on the way to the downside. And it's a Fibonacci level, and it's a psychological level. So to me, yeah, of course, the price can fall 200 pips from here. That would not be a huge surprise for me. Of course, I would be surprised, but it's market, of course, and I understand that it can go anywhere it wants. So that can happen. Definitely, it can happen. But I would not sell, buddy, before breaking 109.95. I would not do that at the current time. No. It's not a sell until 109.95 gives way with a good number of pips. And I'm going to show you an example. Please stick with us, Nick. I'm going to show you an example of a premature entry that we avoided yesterday with specifying the right resistance on gold. On gold, of course, yesterday we talked about a long, if we started trading above 1468, we placed our order to buy at 1469, and the price got to 1466 and a half, something like that, and then it dropped more than 180 pips, something like that. So jumping prematurely on one side will put you under a lot of pressure. If you bought gold yesterday without breaking that resistance, you would have been a very sad man today. But if you have waited for the resistance to be broken before getting in on one side, that means, of course, that you have avoided the drop that has been pushing gold down for 24 hours so far. We are in the 40s right now. Imagine that. Yesterday when we analyzed gold, we were in the 60s. And of course, immediately after finishing talking about the euro, we are going to move to gold, guys. So, what we are going to do now in the next 5 minutes before we switch to gold is that we are going to specify the stop and limit for each of these recommendations. The stop, in my opinion, it's obvious. 30 pips below this level. This is it. Now for the targets, of course, I'm going to give you 2 targets. I know you like that, guys. From the feedback, I know that you like having 2 targets. One of them is nearby, and one of them is more ambitious. So I will continue to do the same today. For me, the drop from last Monday, if we start moving to the upside, this means that we have a good chance of this drop being over. And if it's over, I need to understand and I need to see what the bulls are going to do when it comes to the resistance to the upside. This resistance, of course, after a finished move, I use retracements to spot resistance levels, and I really believe this is one of the best tools that you can use in order to spot support and resistance after a move is done. If you find enough reason to believe that a move is done, always immediately calculate retracement levels. And if we start moving above 43, then we can say that the move from last Monday high to yesterday, I think, no, the lowest price was seen on Friday. We were very close to it yesterday. Up until Friday low, the move is over, and we need to focus on the retracement levels for this move. We have the first one at 1075. Do you think that's enough? Well, come on, guys. That's very, very close. I'm gonna push it a little bit. Okay, I'll settle with you. The 50% level at 1094. That's okay. So target 1, 1094. Target 2, you know, there's a retracement at 1209. We have been talking about it for a long time. It's a retracement level for the whole drop from June top. And in my own opinion, it's one of the targets that we really, really need to care about if we start moving to the upside. So this is the first recommendation for the day. Buy at 1048, stop at 965, initial target at 1094. For you guys who don't like to wait very much, it is 46 pips. Yeah, not a lot. And the second target is of course much more than that. It is 1209. Now what if we buy at 995? The stop, of course, is still the same. Let me give you the targets for this recommendation. Target 1 and target 2. Let's take a look at the chart and see where can we find targets for that. Of course, if we got there, then the retracement levels will have to be recalculated using the most recent low. So we cannot use this at the time. I prefer to take a look at other methods, using other tools. Yesterday high, I think makes a good initial target here. It is 1043. That is 48 pips. But what about target 2? Well, we can still use 1209, although it is more than 200 pips, we can still use that. Now what about the short position? Sell at 109.65. If we go back to trade above 110, I want to be out, so my stop is going to be 10.10. My target 1 and target 2. My initial target for this drop, let me take a look at this. The previous price move, and of course, as you can see, we do have a bottom, an intraday bottom on the daily low, actually, at 939. Well, 939, no, then that's very close. That's very close. 26 pips. That is just, it's a very small target. I'm not going to give you a target of 26 pips. I know a lot of signals services, they do that all the time, but you know, it's just too small to be given to your clients as a target, 26 pips. So I'm going to push it up a little bit. And obviously, there's an obvious support just above the 109. Let me show you what I'm talking about with a horizontal line. I'm going to change the color so you don't get confused. I'm going to move it down here and let me know, what do you think, guys? Look at these bottoms. Look at these price bottoms. Okay, here, September 26th, September 27th, 26th again, and again at October 2nd. The daily lows all are just above the 109. Actually, they are all very close to 109.03, and that is going to be 62 pips, 0903. That is good. Now the second target for that, I have calculations, long-term calculations, and these calculations, the long-term Fibonacci 78.6 retracement level is at 108.14. That would be my second target. So there you go, guys. Here is the euro recommendations for today. Here are the euro recommendations for today. Please take a look at them, screenshot them if you like, write them down, and follow what happens to them. Yesterday, nothing happened, nothing really happened on this front. We did not make profit or loss because the price did not move much. It did not move even this much. So we do not have a result on yesterday signal or recommendation because of the market environment seen in the past 21 hours, which was extremely boring. The market did not move actually, but it's okay. We are hoping for more today. We are waiting for that real move to the upside, hopefully, or even to the downside. We are ready to take advantage of any major move in the market. If we break 10.43, go long. If we break 109.95, go short. This is the bottom line of this whole analysis about the euro dollar, the most traded pair in the whole world. And the recommendation based on that are these: buy 10.48, stop 9.65, first target 10.94, second target 12.09, or, and please guys, I'm saying or because I don't want you to have two positions in the same direction at the same time. If each of them is comes with a stop that is 3 or 4 or 5% of your account. If it's, for example, 1% of your account, it's okay. But I don't want you to, in case we got in at 10.48, the price drops to 9.95, you say to yourself, well, whoa, that's a good price to buy. But I'm already in. You're already in. You're right. you are already in. You don't need to be in again. You will have two positions. You will have double the risk that you were willing to accept when you wanted to get in on the euro, right? We don't want to handle double the risk that we wanted to handle at the beginning. And it's easy to fall for that. A lot of traders, when they buy or sell, when they get it in the market and the market starts moving against them, they add to their position. That's one of the worst things you can do to your account. Did you hear me, guys? That is absolutely one of the worst things you can do to your account. It's a very easy way to destroy an account in no time. Okay, so don't do that. When I give you, and this is a rule always, today, tomorrow, 10 years from now, when I give you two recommendations in the same direction, what I mean is that once one of them is in, cancel the other. We want to be in on the first one that the price reaches. So if the price goes up to 1048, that's it. We are in at 48 and we cancel the order to buy at 109.95. On the other hand, if the price drops to 109.95 first and then start rising, that's better because you'll be adding on a winner, not adding on a loser. That is, from a risk management point of view, that is not as harmful, especially if you place your stop for the first entry at profit, at a small profit. That would be fantastic. Okay, guys, so one of them, when I say buy at 1048, buy at 995, what I mean is that buy, you can place both of them, of course, place both orders. The one that hits first, that's the one we go with, and we immediately cancel the other one. Okay, so the second recommendation, in case the price starts dropping, is buy at 109.95. Our stop is only 30 pips for this recommendation because we are counting on a real star support. And once the support is gone, I don't want to be in this trade no more. So I'm giving it only 30 pips, not 1670 like we usually do. The initial target is 1043 because I know you guys like targets that are 30, 40 pips, something like that. And the second target is also 1209, a retracement level that I cannot wait to see tested. In case we break below 109.95 with a good number of pips, that means there is a shorting opportunity there. So we short at 109.65, 30 pips below that key and very important level. The stop is 10.10. If we go back above the $1.10 landmark, I don't want to be in that position anymore. Our initial target is what looks an important support at 109.03. Of course, it's not nearly as important as 109.95, but it's the next support that we need to care about after 109.95. And the second is a long-term retracement. Actually, it's the long-term 78.6 Fibonacci retracement level at 108.14. So you guys screenshot, write them down, go to your trading platform and immediately place them, and let's see what happens. You know what? I am going to place them on my QTimeFX live account. So first of all, buy stop at 1048. My stop is 109.65, and my limit, I'm going to use the first target, which is 94. Okay, so buy at 1048, stop 109.65, limit 1094, and place. Okay, now the second is of course buying at 109.95 with a limit at 1043. Now this is of course a buy limit because I want to buy at a better price than the price that is in the market right now. 109.95, stop at 109.65, and a limit at 1043. Did we say 43? Yes, it is 43 and place. Okay, and of course, in case the surprise happens, of course, the market can always surprise you. So you should not, what I'm going to say may sound very funny, but I'm going to say it anyway. You should not be surprised when the market surprises you. You should not be surprised when the market surprises you. The market moves against expectations all the time. Even George Soros said this. Once he said that you should expect the market to move against expectations. And if we break 109.95, in my own opinion, that would be a personal surprise to me. I would be surprised, but of course, I know that the market can surprise me, and I will be ready to take advantage of that. That is why I will have a sell stop at 109.65 with a stop just above the $1.10 landmark and a limit at what looks like an important support at 109.03. So there you go, guys. Here are our recommendations for the day, and we are done with the euro. Immediately, I'm going to use the last 15 minutes of this hour in order to talk about the pound, our best recommendation yesterday. And of course, after that, we're going to have a break and we're going to talk about other instruments. So the first thing I want you to note about the pound, it's not technical. It is about yesterday trading. Of course, we had this recommendation. We had two recommendations. This one was not triggered. We did not drop to 27.74, so that's a delete. But this one did, so I want to say congrats to you guys on this one. Buy at 28.32 with a stop 27.74. We did not even come close to that stop. And target one at 28.78 was reached in no time. I think it was less than 1 hour between the order triggered or executed in the market and between reaching the limit. So how many pips is that? It is 46 pips. Congrats on this profit. Our best trade yesterday, long pound, made 46 pips. So congrats. I'm gonna congratulate you guys. Congrats on the long pound trade from yesterday. 46 pips. Okay. It was very nice to see that happen, of course, when technical analysis gives you important support and resistance levels and you use them to get in the market, and then you get to your limit. That is fantastic. And as you can see, once we started trading above the trend line, we got our long here, just above the trend line. Actually, it was above these highs here, or 10 pips above these highs. We were already above the trend line, and we placed our limit at the 50% level. And it reached the 61.8 level at 28.96 before falling again. So what does this mean for today? Honestly, the break above the trend line, of course, it is bullish, but the whole chart is not very bullish. And there's a reason for that. The reason is that we stopped very close, almost exactly, with stunning accuracy, at the 61.8 retracement level. And when you stop at retracement levels that are resistance, that is not very bullish, guys. So if the pound bulls, if the cable bulls want to do something beautiful, like yesterday, they created a beautiful move in 3 hours, almost 100 pips in 3 hours. That was fantastic. If they want to do the same today, that starts with breaking above 28.96. So without breaking above 28.96, things are not going to be good for the pound today. I may be able to lower that a little bit. Let me see if I can. Actually, yeah, I like that. Remember, yesterday's target number one for our long position was at 72. Why is that? Because it is the 50% level for the whole drop from October 31st low. So after this drop, we were rising. I suspected that 50% level will be a resistance. Now I'm going to use the same level that was yesterday limit. I'm going to use it as resistance for today. So resistance, as you know, first of all, I specify resistance as support, and then I build a strategy using the numbers. 2872, this is my resistance. Where is my support? Well, we can have more than one support after yesterday's very good move to the upside. One of the most important and interesting things, in my own opinion, is the rising trend line from last week low, currently around 20, but of course I'm going to use these highs, 22, they are very close to it, obvious resistance here, and once we broke above this resistance, the market moved to the upside in a sharp way, which confirms, of course, the importance of this level. So I'm going to use the support at 22. And I'm going to build a strategy using these two numbers. Remember, guys, I always say this, and I really want you to remember it. You do not need a very complex system in order to generate good trading recommendations or good trades. What you really need is to specify what is the most important resistance for the time being, what is the most important support. And you can place orders on the break of these levels. If we break the resistance, get in with a buy. If we break the support, get in with a sell. And of course, the stop for each one would be on the other side. So the entry for the sell position is the stop for the long position. This is what I really do all the time, and I think that it's a great way to trade the market. You let the market tell you where is it going. So you can assume, you can take sides, but once there's a break, you're not assuming anymore. You are following the direction of the market, which is, of course, safer. It makes more sense, and it gives you better results, which is, of course, the most important thing, the thing that we are all looking for. So in my own opinion, I have given away my secret right now. Just follow the break. Specify 2 steps to your trading. Specify the most important support and resistance levels, and follow the break of either, and that's it. So with this, after specifying support and resistance, we can start building our strategy. Or target one, let me call it. And of course, sell at stop and 2 targets as usual. I know you like the 2 targets, guys. So buy 10 pips above this 28.82. The stop is 10 pips below the support 28.12. 70 pips, yes, that is fantastic. That is within what we accept for the pound. Fantastic stop. I don't want it to be too close, guys, or too far. In my own opinion, both are equally harmful. When you place your stops very close to your entry levels or very far. In both cases, that is harmful for your account. Why is that? If it's very close, then you will see many stops hit. And if it's very far, then one stop will cost you a lot of money. It will cost you what should 3 stops cost you, not one. When you place a stop at 150 or 200, I know people who do that, and I always advise against that, of course. Don't use stops that are 150 or 200 pips unless you lower the trading size. If you really want to get in and you can't find the stop that is less than 150 pips, it's okay, but don't trade the same size that you always do. You have to cut it in half or something like that. If you are used to trading one lot, make it half a lot. And it's okay when you lower the trading size, it's okay to add the stop level to make it more in pips, because in dollar terms it's going to be the same. So your account from a percentage point of view is handling about the same kind of risk. So guys, initial target when you buy at 82, let me see. If we get here, 82 above the 50% level, then we are testing the 61.8 again, and that of course means that a break, the second, of course, first time is a test, second could be a break, of course it could be a failure, but usually if we come back to the same level and push beyond it, we just need a little bit of push beyond this level, and after that this high will not be safe from the bulls. What is this high? Let me see. It is 976, 2976. How about that? 2976. I think that's not the kind of target you want me to place. I'm going to look for something in the round of 40 to 50 pips, just like yesterday. Initial target was at 46 pips, and boom, we got away with that. We cashed in 46 pips in no time. Congratulations again on that fantastic trade if you were following our recommendations yesterday. Now 916, how about that? No, I still need something more than that. So I'm definitely going to use the 78.6 Fibonacci level here, especially that it's close to these highs and lows. And this level is at 2931. And the second level will be trading above this, and since this high is 2976, then it makes perfect sense to me to place it at the psychological level of $1.30. So there you go, guys. Initial target of 49 pips, but the second target is more than 100. Now, what if we sell? If we sell, of course, we need to start trading below these levels here, and that of course means there's a good opportunity of attacking this low here, which is at 2767. In my own opinion, that makes a lot of sense. So it's 2767. And from yesterday, I know that we have a key retracement at 27. I'm going to show you the retracement in a minute. This is it, guys, the 38.2 retracement for the whole move, for this whole gigantic move, which started early in October and took the price higher. Wow, that's some kind of move, man. More than 800 pips, more than 800 pips to the upside. Up until now, we have not retraced the 38.2. That's why the limit, this is yesterday's news. I'm going to delete it. And of course, this is also yesterday's news. I'm going to delete it. And that's why we are placing our second target here at the 38.2 retracement level. So there you go, guys. I'm going to leave this on the screen for you. You can screenshot it. You can place it on your trading platform. You can trade it in your QTime FX with very very tight spreads in your account with QTime FX. It's going to have very tight spreads, $500 of bonus and 0 commission. Fantastic news for you guys if you like to trade. If you like to trade a lot, especially some people who trade 5, 10, 15, 20 times a day when the spread is very low and commission is it's not there to cost you anything, then you can really save some money comparing to a broker who really pushes their spreads to the upside or charge commission with very tight spreads. So this is it, guys. Go to your QTime FX real account and place these orders right now. I'm gonna really do just that. I'm going to buy at 28.82. My stop is 28.12, 70 pips, and I do have a limit at 29.31. The limit that you guys like, the small limits, not the ones that I sometimes or most of the time I look for, actually, to tell you the truth, which are more than 100 pips. So here's your order, your first order: buy 28.82, stop 28.12, and your take profit at 29.31, and place. It's placed. Now the second order is of course a reverse to that. As you can see, the entry for the sell is the stop for the buy, and the stop for the sell is the entry for the buy. So we are going to sell stop at 28.12 with a stop at 28.82, and of course our limit is going to be 27.67, and place. Great guys, that is great. And here are our, of course, the levels that we have our orders at. And with this, guys, we reach our first break for the day. I'm going to take a short break, 6-7 minutes, something like that, and make myself something to drink, and then I will come back with more fresh trading ideas, with more recommendations. This is the pound recommendation on the screen for you. We have placed orders already for the euro and for the cable, and after that, of course, we are going to talk about more trading opportunities. So be there. After this short break, get yourself something to drink, think about the market for a little bit. The first thing I'm going to do when I come back is read your comments, and if you have any recommendation, not recommendation, any request, if you have any request at all to analyze any instrument, I'm going to be there and I'm going to take care of it with a smile on my face. This is my promise to you. Meanwhile, of course, I want to remind you that this webinar comes to you because your broker loves you. QTime FX wants you to spot the best opportunities in the market, like the buy on the pound that we had yesterday. And I assure you that your broker, if you are trading with QTime FX, your broker was happy when you made that money yesterday, and they want you to make the same kind of profit every day, today and tomorrow. That's why they are sponsoring these webinars, these free webinars. Of course, they are not free, guys. I'm giving you signals here. I'm giving you recommendations, and I charge a lot for that. But QTime FX wants you to make the money. That's why they told me, Munther, come on, give these guys some good trading recommendations. We want them to make money. That's why we give you recommendations. That's why we have these webinars. That's why we are giving you the opportunity to trade with very tight spreads. 0.4 of a pip on the euro dollar and dollar yen with zero commission. This is the magic word, zero commission. Touch spread with commission, that gets you nowhere. Touch spread with no commission, then you will know that you are starting to save a lot of money on your trading expenses. And if that great offer was not enough by itself, we are offering you the chance to get yourself $500 in real money, green money, not trading credit, guys, real money. Withdrawable $500 in bonus. So contact us at fx_educast via Telegram and let's open this account for you. Now to our break, 5, 6, 7 minutes, something like that, and I will be back with more trading opportunities, guys. Love you all so much. Thank you for being here. Let's see you after the break. Okay, you guys, welcome back, everybody. We had around 10 minutes of a break, and we are back to the webinar. So I'm very glad that you guys are here. I am understanding some of the things that you are talking about, but there is some kind of language that I do not recognize. And the guys with FX Educast are taking care of that. They are answering your comments, maybe questions, I don't know, because I don't understand this language, but they are doing just that on the chat. So thank you to my team at FX Educast. Love you guys so much. And I also love my viewers very much. Thank you very much for being here. I really hope that you guys are going to enjoy today's webinar. Just like yesterday's, we talked about the euro and the pound before the break, and now we are going to continue. And the first thing I want to talk about is gold. Oh, gold. Oh, gold has been dropping like a stone this month. The beginning of the month, we were trading above the 1500 level. Now we have tested levels that are just below the 1450. So we're talking about a serious drop to the downside on gold. Yesterday, of course, we had a recommendation to buy at 1469. That did not happen, of course. We did not touch that level. The highest price seen yesterday was 66.4. That is 26 pips below the trigger level for our long position. And of course, that is because we placed the entry order, we placed the recommendation at the right place. Because the price was unable to break above our resistance, and therefore, of course, it did not trigger the long recommendation or the order that we placed to use the market to our side if the market starts moving to the upside. That did not happen, and because of that, because of a failure to break above the resistance that we specified yesterday, gold collapsed, completely collapsed into the 40s. The 40s, the first time since when? Oh my God. Oh my God. We are trading in the 40s for the first time since early August. So we're talking about 100 days. These are the lowest levels in 100 days. And you know why that happened, guys? Let me show you. Do you remember what we said yesterday? We said that if the price breaks above the moving average band. Let me just focus on the chart here. I want you to see the chart, and then we'll get back to the whole screen. But for now, please, I want you to focus on this one. Guys, you know I like giving you the best recommendations, but I don't want to only do that. I want to use these webinars in order to give you some kind of information, educational information, let me call it, on how to do it yourself. So of course, I love having you here, but because I love you so much, I want to give you not only the recommendation, but more technical information on why we gave that recommendation, how you can do the same yourself, bits and pieces of educational information that I'm sure will help you be a better trader. That's why I'm focusing on what happened yesterday. Guys, here, we were maybe around here when we started talking about gold yesterday. Here, maybe, yeah. And I said that we need to see 69 because the top of the moving average was around 68. So we need 10 pips above that, and we are in. That did not happen. Failure inside the moving average band was followed by a strong drop to the downside, and this happens all the time. It is one of my absolute favorite trades. When we fail to cross above or below the moving average band, the direction should be expected to change. So we were rising here, we were attempting to recover, we failed inside the moving average band, and then the price dropped real hard to the 40s. And again, we tried to recover, and then we touched the 40s again earlier today. Yesterday low was 47.90. Today current low is 48.75, less than 10 pips between both of them, and that indicates that just below 1450 we have some kind of support. We are going to try to find what kind of support is it and where is it exactly. Well, the first thing, let me go to the daily chart for that. The first thing I'm going to do is I'm going to remind you of the retracement levels that we were talking about. I'm going to add the 38.2. Yes. Now you can see, right? Now you see what is it in the 40s that the bears are looking for. They are looking to test one level. And of course, this level can make or break the short term, in my own opinion. So this level will be extremely influential in deciding on which way the price is going to take from current levels, at least for the short term, and maybe more than that. The level I'm talking about is, of course, guys, the medium term 38.2 Fibonacci retracement level at 1446. Yesterday's low was only 19 or actually 18 pips, because this is 1446.1 if you round this up. It was only pips, guys, above this. So the low, yeah, it is only pips above this level. And that is why, of course, we are going to use 1446.1 as our support for now. I'm going to switch to the 4 hours to show you that the low seen yesterday was extremely close to this level. Only 18 pips, and of course 18 pips on gold, it's a very volatile instrument. 18 pips on gold is nothing. It's like 7 or 8 pips on the euro. So we are really very close to this support. We came very close to touching it yesterday, and then again today we are still very close to it. So keep your eyes on the support. Let me put this on the chart. Support at 1446.1. What about the resistance? This is the first piece of information about gold for today. What about the resistance, guys? Of course, I want to use this trend line, but it is very far because of the recent very sharp drop here. So this is, of course, a resistance to watch, but it's not the immediate resistance. So I want to find something that is closer, and to do so, I may use this trend line and then switch to the hourly chart. Adjust these trend lines to hourly candles, and it is obvious that this trend line is important, of course, because it's very close to the moving average band. When I find two trend lines, I prefer the one that is closer to the moving average band. I like that very much. I like to see the moving average and the trend line giving me the same or at least similar kind of information. And when they do, that's an indication of a strong level. Here, just like yesterday, remember, you saw what the moving average did. So today that can happen again, especially that we have a trend line very close to the moving average band. It's very close to it. So I'm gonna use this trend line as my resistance, but it's again, it is still very far. However, I really prefer to wait for the price to penetrate this trend line. I know that some of you would say, well, how about the overnight low or the agent session high maybe when we start trading above that, we will break above the trend line. Well, yeah, maybe, but without breaking above this trend line, I really don't see a good reason to go long on gold. You can buy here, and then the price moves maybe 10, 20 pips. Even before you have the opportunity to close your position with some kind of profit, the price will start falling again. Okay, guys? So I don't want this happening to you. I know it's very tempting to buy gold around 1450. God knows I feel the temptation. And this is something that you need to deal with, guys. You need to fight the temptation to buy things or sell things in the market just because they have reached a certain level. Reaching a certain level by itself is not a good reason to get in the market. Good reasons for getting in the market are breaks. Breaking important support, breaking important resistance. This is the thing that I want you to use to initiate positions. Not because we got to a certain level. We got to 1450, we can get to 1400. Of course we can. It's a market. It can move in any direction it wishes. It can go in circles if it wants. So you have to deal with this fact, guys. Just because we are at 1450, a very tempting level to buy, according to recent levels, of course, compared to recent levels, it's the lowest level in 100 days. So my God, that's very tempting to buy, but I'm not going to do that. I want you to do the right thing. Once we break above the moving average band and the falling trend line, I assure you that we are going to be on the wrong side of the market. But we're not taking any chances at current levels. We can still go to 1446 at any minute right now. We can drop these 50 pips in no time. And what you're going to do there, you're going to place your stop a good number below that. It's going to result in a large stop, or maybe even you will lose control of over your account, over your trade, once we are again in the mid 40s. Okay, so focus on breaking the trend line and the moving average band. This is what I want you to do for today. I'm not going to place a long position in these areas, although it is very tempting. I'm going to place a long position or a recommendation in order to get in the market on the long side of the market if we break above this trend line. So let me do just that. Okay, guys, now the resistance is around 61. Of course, this is a falling trend line, so with time it's going to fall to, I'm looking for something horizontal in this area, but I really can't find something that is really important. Okay, how about this? 57.75. When will this trend line be at? 57.75. No. I want something here or here. Maybe during the American session. I want to see where this trend line is going to run during the American session, and it's around 1460. So 1460. This is my resistance, and my support is 1446.1. Okay, obviously, obviously, guys, I'm sure you agree with me, having the support and resistance almost 140 pips apart means that we cannot use them to build a reverse kind of strategy. So if I buy above 1460, I cannot place my stop below 1446. That would be a huge stop, and we don't want to go through that. So what we are going to do here is that we are going to use these levels as entry, but we are not going to use them as stop. So if we break above the resistance, that's your long entry. If we break below the support, that is your short entry. But we will not wait for these trades to reach the stop that is on the other side. If we buy above the resistance, we're not going to place our stop below this support. We're going to, of course, to look for a closer support levels to place the stop at. So we are going to separate the two recommendations like this. Let me show you how it's done. By, let's say, 10 pips above 1460, so it's 1461. Stop. This is the thing that we need to really look for. Target 1 and target 2. If we buy above 60, that means we are already trading above this trend line, the moving average band. I don't want to see the price fall below this top. The stop is 57.75. Let's say about 30 pips below that, guys. 57.75, 54.75, 54.70. That's reasonable. That is reasonable, yes. 63 pips of a stop. That is absolutely reasonable. Now, what about the targets? Once we start trading above here, of course, we will be expecting the price to travel beyond yesterday's high, 66.4, but I'm going to use that as initial target because I know you guys love small targets. So the first target is 54 pips, but the second target is going to be much larger than that. For that target, what I'm going to do is I'm going to calculate the retracements for the most recent part of the drop, which started here, November 1st. As you can see, we were trading well above the 1500 level, and from there, boom, 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 guys, a serious drop. So the first and initial retracement level among the key ones, of course, is the 38.2. We have smaller retracement levels than that, like the 23.6% or the 33%, but we don't consider them to be key. The first one in the key group of retracement levels is 38.2, and it is at 74.3. So is this okay? 74.3. I'm gonna have to push beyond that because I don't think if we break the 60, I think that gold will really start jumping to the upside. The 50% level is at 82.3, which makes fantastic sense to me. 82.3, I like that very much. So a target of 213 pips. Of course, we have the small target for you guys who love small targets, and we have the very ambitious target. Well, Ramhans, that's very good to hear. Thank you very much for your kind words. As I told you, I'm only 18 years old, and I'm going to be 18 years old the next year, and the one after, and the one after. Thank you for that. Michael, buddy, yeah, I do have an innocent face. I have to admit that. I can't show that her, you know. I don't have that. Maybe because I'm happy with trading. I'm happy with you guys. So that's the happy face that, of course, looks like an innocent face not the angry face that looks evil. I don't have that. Thank you guys for your comments. Keep them coming. I enjoy them very much. And I want you guys to tell me, what do you think about these recommendations? What do you think about the ratio between the stop and limit, for example? Is that the kind of thing that you like, or do you think that it should be different? I'm going to change the color on the buy recommendation and then place the short recommendation. Okay, guys. Well, with reaching the 40s, I don't believe that we can short before a clear and clean break of 1446.1. That's why I'm going to place my entry, let's say 30 pips below that. So I'm going to sell at 1443.1. Okay, and we'll see where the stop and the targets will be. Target 1, target 2, and let's search. Of course, I want the short to be in different color than the long, and the specification of the support and resistance in a totally different color. So I don't want to any of you guys getting mixed up because of the colors. Okay, so you guys, we're going to sell if the price reaches 1443. If we get there, we are going to sell, because that means a continuation. That indicates more weaknesses coming, and of course we want to be positioned to take advantage of that weakness. Now, where is the target for such a trade? For that, of course, we need longer time frames. And again, first of all, I'm gonna show you the retracement levels. 38.2 at 46.1. The next one is 1411. So in my own opinion, guys, if we depart away from the 40s to the downside, we're going to the teens. It's not something that we're going to target 50 pips with or 60 pips. We're going to target much larger than that. So in my own opinion, the sell at 43 is going to target 1411.8. But of course, I'm gonna leave that as a second target because it's very far. Here we got our first number out of the 3 numbers that we are looking to fill. Now, an initial target, let me see these highs here, 39.14 and 37.70. Well, 37.70, they are very close to each other. As you can see, we do have a support in this area. Sorry, it is a support now, but we are counting on a previous resistance. It showed resistance here, as you can see, and now it might be able to provide support around 37.70. So is that a good target? 37.70, that means 54 pips. Well, yeah. Okay, this is your small target. I know some of you like that very much. They want the small targets. This is the feedback I have been getting recently. What about the stop, guys? It's very important, of course. What if we are wrong? If we sold at 43 and then the price started rising? I don't want to be in this position if we break above yesterday's low with a good number of pips. It is 47.90, so 30 pips above that means 15.90. Fantastic. Fantastic, yes. The stops are reasonable. The limits are attractive. Everything looks fantastic from where I stand. So here you go, guys. This is the gold recommendations for today. Buy at 1461, stop 1454.7, initial target or the small target 1466.4, and the second target is much more ambitious at 1482.3. If we continue moving to the downside and we break below 46.1 with a good number of pips, in this case I'm considering it to be 30 pips below 1446.1 is a sell. That's why we're selling at 1443.1 with a stop at 1450.9. Initial target, of course, it's a small target, 54 pips at 1437.7, and a much more ambitious target at 1411.8. So these are the recommendations for today. Screenshot them, place them in your account, do whatever you like with them. Keep track on these recommendations. Okay, guys, one of the things that I want to talk about when it comes to gold before we take our second break of the day is, of course, we were talking yesterday about the wave count. You remember that, guys? I'm going to remove all drawing tools. We don't need them anymore. Okay, guys, you remember this wave count? We said that it is probably a double three of some sort. First part of the correction from the highest price seen this year was an obvious ABC, fantastically obvious ABC. But then again, of course, it was very small compared to the move before it. As you can see, look at the size of this move. The ABC was very small, and that's why we needed a second phase of correction. Of course, in the middle we have an X wave. Yes, this move to the upside was an X wave. Now, what happened after that and what can we count? Yesterday, I want to remind you of something we said, but let me just draw this. We said that the move down from what I supposed to be the top of an intermediate wave X between two threes is also divided in three, of course, ABC. Well, this is the first move to the downside. Actually, yeah, although the internal structure is not very satisfying, the move itself is, and after that, of course, we can still count. We can still count on this one, yes, as the beginning of wave C. What we said yesterday, and please go back to the video if you don't remember, we said that the drop until yesterday's high, this is what we said. Sorry. I need to change this into the 5-wave pattern. We said that if we count this move as a 1, 2, and this, of course, as 3, yesterday we said that it is still looks not finished. Okay, so how about today? Any changes there? Let me, sorry about this. Yes, so yesterday I had the same exact drawing. I used the Elliott tool, wave counting, to show you that there is a good possibility that the drop from the top of wave B is not over yet. So did this change with yesterday's drop? Well, I don't, let's see. Maybe 1, 2, 3, 4, and 5, 6, 7, 8, 9. So 9 waves to the downside. That means Maybe this is wave 1, wave 3. Yes, let me show you what I'm trying to do here. This small drop could be wave 1, and this is wave 2, and from there wave 3 started. So I'm gonna show you the 5 waves inside 3. Absolutely fantastic. Absolutely fantastic. Of course, 5 did not dig deep enough. Why? Because 3 is already shorter than 1, so we cannot have 5 being very large, because that will leave 3 as the weakest, the smallest among the 3 waves, and this is a no-no in Elliott wave. No, we do not accept that. So wave 1, 2 here, 3, let me label them for you. Who's here uses Elliott wave a lot? Let me know. Hello, Rui. We have Rui again with us. Hello, buddy. How are you doing? I'm sure you use Elliott wave a lot, right? So 1, 2, and of course this is, sorry, this is what I'm trying to do here. So we started here, 1, 2, and then 3. This might be 5. Of course, 5 here is the end of 3. This might be 4. And as you can see, wave 4 itself terminated within the price range of wave 4 of 1 lesser degree, and that is, of course, that goes very well with the guidelines of Elliott wave. And again, finally, we do have the termination point of 5 wave. Is this? Yes, here. Well, this is a very, very bullish wave count, but it has one condition. We should continue to trade above yesterday's low, 47.9. So I'm going to leave this very important note on the chart, guys. We have a very, or an extremely bullish wave count with one condition. We need to keep trading above yesterday low 47.9. As long as we do not trade below this level, guys, what I really expect is a serious move to the upside. I'm not talking about 50 pips. I'm not talking about 100 pips. I'm not talking about 150 pips. And I'm going to zip it here. I'm not going to say no more. But we have a condition, of course, for that. And this condition is that we need to keep trading above 1447.9. If we get below 1447.9, then this wave count, of course, this is the 5 is here. The 5 and C terminated yesterday at the low of yesterday. This is a probable wave count, and it comes with a condition. So keep the condition in your mind. As long as we do not trade below 47.9, gold can explode any minute. And if we do, then we should ditch this wave count and look for another one. But for the time being, I really believe that this is a good possibility. A good possibility, that means that gold has finished dropping from the levels above 1500 that were seen early this month. Actually, the actual price top was seen on the first day of the month at 1516.05. This is the highest price in November, and it is also the highest price here in this area from which this current drop started. And we do have a fantastic 5-wave sequence to the downside with an extended 3 which is of course extremely normal. Not only normal, it is preferred to see extension in 3, of course. I don't know if you guys understand what I'm talking, or if it may sound like something very strange to some of you guys who are not Elliotticians, but from an Elliott point of view, this wave count goes along very well with the rules and the guidelines of the Elliott wave theory, or the wave principle as Elliott himself named it. And if I'm correct with this wave count, then guys, we are going to see gold move much higher to the upside. Of course, we can use this as the top of B. Even if we have a price that is higher, we can count the waves inside B as a triangle, for example, 5 waves, and the end of wave E can be here. A triangle does not have to be contained within 2 contracting lines. Of course, we can draw a triangle like this, then Elliott terms. Yeah. Okay, and of course we can say yeah, this is the first wave, and then D, C, B, A. Yes, it's a very complex wave count inside wave B, but that's how things should be. Waves B and 4 are the ones with the hardest wave counting process. So when you are in an area where you don't know what the hell is going on here, then that is probably a B or a 4. They are the 2 most complex waves. So let's not focus on the B because it's really confusing there and very complex. Let's focus on this drop, the last part of the drop. The wave count is beautiful. It comes with one condition. If we can keep this condition, the price can start rising in a very sharp way. Okay, so today we're talking about 1452. Maybe tomorrow, into tomorrow's webinar, we'll be talking about 1472, or maybe even more than that. Keep your fingers crossed. I really hope this thing starts moving to the upside immediately. And yeah, guys, with this, we are going to take our second break of the day. Gold has took a lot of our time, but it really deserves it, because we may be in front of a great trading opportunity. And before I go, I want to say hi to Rui. Rui is trying to use Elliott a lot, and I encourage you to do so, guy. My friend, my fellow trader, Rui. And if you have any questions, please shoot on the chat. I will be more than happy to answer them all. So, guys, we have the recommendations for gold. Buy at 1461. I really do not recommend, although there's a good chance of moving to the upside, I really do not recommend, getting too excited too early for the bull. I love the bull today. I really believe that gold has a great chance after touching the 40s, getting very close to the 38.2 retracement level for the medium term at 1446.1, getting extremely close to it yesterday and then again today. I'm really excited for the bull. The bullish possibility is my favorite for today, but I really do not like to jump in too early, because we still have a resistance around 60 and we are still more than 70 pips below that. So there is no bullish break yet. I'm going to wait for the bullish break. If I see the bullish break, I'm going to ride this thing to the outside. That's why, to the upside, sorry. That's why I'm placing my limit at 14, my order to get in at 1461. I have a long buy at 1461, stop 1454.7, target 1 1466.4, target 2 is much more ambitious at 1482.3, and I really believe we can get there if we break above 60. If the market continue to move to the downside without breaking 1460, especially with a failure very close to 1460, that would be even a stronger weakness sign. If that happens, then we will probably break below 1446.1. If we do get ourselves 30 pips below 1446.1, I want to short. I'm going to be shorting this thing with a stop at 1450.9. My initial target, of course, this is a small target that I know a lot of you guys love, 1437.7, but a real target, a much more meaningful target is 1411.8, the 50% retracement for the medium term. With this, guys, I enjoyed every moment. We come to the end of our second hour of our 3-hour webinar for today. We still have one more hour after a very short break. It's going to be only 5 minutes or so. And after that, I assure you that I'm gonna look for more trading opportunities for you. I'm gonna look very hard other instruments. We're gonna talk about anything. If you want me to analyze anything in specific, please let me know. Please just ask for it and I will do that. I always analyze the things that I know you guys ask a lot about from my own experience with my clients, with my viewers. I always know that you are interested in 1, 2, 3, 4. I know the short list. But if you want me to analyze anything else, please let me know. I know that I'm very interested in the dollar yen, and I'm going to do that after the break if you don't have any requests. For now, thank you very much for being here. Short break, 5 minutes, and we will be back. But before we go, of course, I'm going to remind you that this webinar is sponsored by QTime FX, our favorite broker in the whole world, who's offering you the chance to trade with fantastic spreads, zero commission, and of course, $500 of real green money, not trading credit, guys, real money in your account, and you can withdraw that. You can withdraw that. Okay? So come on, contact us at fx_educast via Telegram. Let's open this account for you. And that is how you are going to keep these webinars coming every day when you become our clients, because we want our clients to make money. We want them to make profit. And up until now, we are doing very well this week. And I really hope for a great day today and a great week ahead. And for now, it is only going to be 5 minutes away from you guys, 5-6 minutes, something like that, and I will be back with more fresh trading opportunities. Love you so much. See you in 5. All right, you guys, we are back. We are back, everybody, after the short break. Hello, how you doing, guys? I hope you're having a wonderful time. Got yourself something to drink, and that you are now ready for our third and final hour of today. So with that, of course, I'm going to switch to the chart immediately, and let's do this. We talked about euro, pound, and gold so far. Now I really believe that we should discuss the yen, because the yen is very close to such an important resistance level. Yesterday we talked about 109.37 for the millionth time recently. When you look at the dollar yen chart, you cannot take your eyes away from 109.37. It is obviously the resistance to watch, and if we break this thing, the dollar is going to start jumping against the yen. But if the dollar fails to break above 109.37, it might collapse something like 400, maybe 500 pips, something like that. Sorry. So I'm going to take a look again at the dollar yen. Yesterday we had two recommendations, the buy at 109.47 and the sell at 108.58. Both of them were not touched, so we did not have any recommendations or orders executed yesterday. Any recommendations triggered? No, we were flat on the dollar yen all day yesterday, and now we're going to take another look at it to see if these levels are still the same levels that we need to focus on, or if we have closer levels than that. First of all, 109.37, I have made my case so many times why this level is the level to watch. Okay, it is something that is amazing when you look at the chart. Let me show you why. I'm going to use other charts because I want to keep the analysis tools that I used yesterday on that dollar yen chart. So I'm going to use this, and I'm going to switch, of course, to daily. And I am going, first of all, to use the retracement levels. This is the retracement tool. I'm going to use and focus on one level in specific. It's 61.8 retracement level. And just look at this, guys. Do I need to see more than this? Do I need to look at another chart? Do I need to say why this level is the star resistance? I think anybody with medium knowledge in technical analysis knows that 109.37 is the resistance to watch. First of all, it's a Fibonacci at 61.8, the most important Fibonacci level for the drop from April top. So from April and until August, we were falling from 112 to 104. We're talking about something that is just a little less, just a few pips less than 800 pips of a drop. 800 pips, guys. And now we have corrected 61.8 of that gigantic drop. So we are touching this level. It's the most important Fibonacci level. But is that all? Of course not. You can also take a look at this previous high. It's August 1st high. As you can see, the high is 109.32. It's unbelievably close to the Fibonacci level. As you can see, this is 5 pips here, almost 5 pips. And after reaching the 109.30s early in August, you can see what happened to the price. Absolute collapse, from 109.32 to 105.64 in 3 days, guys. In 3 days, okay? And later, we reached 104.45. Whoa. That was something unbelievable. Now, after reaching that, we are correcting to the upside, and again, we are touching the same exact level that caused this drop. We failed around this level, and we dropped very, very hard here in August. Now we are touching the same exact level, the same exact level, and we need to pay a lot of attention to 109.37. I'm gonna continue to focus on this level. I'm gonna believe in it, and I'm gonna build my strategy depending on it. Simply, it's very simple. As long as we are below it, the chances of moving to the downside are very strong. But if we break this level in a clear and clean way, if we get a confirmation of a break above it, like a daily close or something like that, then 112 will not be very far. 112.40 to be exact, will not be very far. We can get there in no time. So it's all about 109.37 when it comes to the resistance. I'm not going to change my mind. But let's check the support. If we have an update for the support, yesterday the support was 68, I think, which was the 50% retracement for the whole move from the bottom seen late in October. The 50% level is 108.68, and it was also reinforced by this low here. The daily low for last Wednesday was 108.62. So 62, 68, very close to each other. We had something to focus on there. Now, the price action in the past 24 hours is, of course, bullish. We were trading, the lowest price seen was 86. Of course, we did not reach the 50% level or the short recommendation, the short order that we placed here below the 50%. We continued to trade above it. Not only that, we have found support above the moving average. You can see that, can't you? Right, guys? You can see that the price is finding support one candle after the other at the moving average, simple moving average 35. Very, very close to it here, here. Unbelievable. And then it started moving to the upside, which is, of course, normal. When you find support at a moving average, what you should expect is a move to the upside. Is this going to continue to happen? Well, it depends. I'm gonna shift to smaller time frames. The rising trend line from yesterday's low is currently running around 109.03, but of course it's a rising trend line and it's going to, get higher, 1 pip, 2 pips, something like that every hour, with the appearance of the new candle at the top of each hour. Now, the moving average band is just above that, between 109.06 and 109.12. So I'm going to use the bottom of this support area, of this moving average area, as my support. So resistance is still at 109.37. It is very important. That's why using these stars to indicate its importance. Support has shifted up significantly because I don't want to see the price after survival at the moving average and finding support at the moving average. I don't want it to break below the moving average now and below the rising trend line from yesterday's low, which leaves me with a support that is much closer to a price action, and it is at 109.06. And as you can see, the price currently is almost in the middle between these two levels. Not exactly in the middle, but very close to being in the middle between the two. Now, when you have levels that are this close to each other, that makes it very easy to build a trading strategy. So I'm going to use both of them as entry, and at the same time, the entry for one recommendation is going to be the stop for the other. So buy, of course, if we break above 109.37, 109.47. Maybe I'm thinking about maybe more than that. Let's see how things go. Maybe 10 pips. Maybe I'm going to add to that a little bit. The stop is going to be 10 pips below 109.06, which means 108.96. How about that, guys? 51 pips. I think that is enough. I think that is enough. Yeah, 10 pips above or below these levels is enough. Target 1, target 2. These are my recommendations for now. Let's look for a target. The first target, remember, we have a retracement at 10.13. I'm going to show you the retracement. The 61.8 level is at 109.37. The next one that I really care about is 71.4, which is at 10.13. So it can be used as a great initial target. Above that, I really believe if we break above this one, I really believe, of course, we're going to still need to show strength against this previous top 10.67, but I really believe once we start trading above 10.13 that we can go for gold here. We can push towards the top that from which the whole drop started back in April, which is 12.40. Yes, guys, 12.40. Munther, are you talking about almost 300 pips? Yes, I am. But of course, this is the second target. For you guys who want to close their trades within 24 hours or so, you can use, of course, the first target, 10.13. So once we get to 109.47, I really believe that we can push beyond 110. 110.13 is the 71.4 retracement for the medium term, and that can really be a great target, can make a great target for this move to the upside in case we break the very important resistance at 109.37. So this is the first recommendation for today. And how about the second? Of course, I'm gonna initiate a short in case we start trading below 109.06, and that is why I'm gonna recommend you guys to sell at 108.96 with a stop above 109.37. So my stop is going to be 109.47. Now let me see where I can place my targets. I'm going to cheat a little bit, and I'm going to show you what I mean. Sorry. I am going to take a look at if they are still on the chart. Yeah, yesterday's targets, 108.06 and 104.40. I'm going to use them. Yeah, I'm going to use the same targets from yesterday. Let me change the color here. $108.06, 90 pips, that's very good, but the second target is not going to be 90 pips at all. It's going to be a gigantic target, and I really believe that we can get there given that we do not break above 109.37. If we continue to trade below 109.37, guys, I really believe, I know you when you look at this target, you say to yourself, well, what is this, man? What is that? You're talking about 450 pips of a target. How long is it's going to take to get there? Well, yeah, of course, it's going to need some time. But technically, if we fail to break 109.37, this is the minimum target for the long term or the medium term. Okay, so the minimum reasonable. Let me rephrase. The minimum reasonable target for failing to break a Fibonacci level as important as 61.8 is of course reaching the bottom of the previous move, bottom from which this whole rising move started. So we rise, we rise. Look at this. Yeah, guys, we rise and we fail at the Fibonacci, and then we start dropping. We should be able to at least test, if not break, the bottom from which this whole thing started. So let me delete these recommendations from yesterday. We don't want to get confused. I don't want you to be confused. I want everything to be crystal clear for you guys. That's why I'm going to keep my recommendations for the day as obvious as possible. So to round up the dollar yen, resistance is still and will continue to be at 109.37. It's a very important level. Support is now at 109.06, and that is why we're going to use these two levels to build today's strategy. Above 37 we're going to buy, below 109.06 we're going to sell. That leaves us with a long position suggested to you guys at 109.47. Our stop is 108.96. Initial target 10.13, second target 12.40. On the other hand, if we start falling, and I hope we do, 108.96 makes a good place to sell. Our stop is going to be 109.47. Initial target is going to be at 108.06. Yes, guys, 90 pips. I'm not settling for less, because failure at or very close to 109.37 is going to have a strong bearish consequences. Strong bearish consequences are going to follow this failure. Okay, and so the minimum target, or the initial target, let me call it, is 90 pips, but I'm going for much more than that on the medium term for 104.40. That is more than 400 pips of profit. So I really wish you the best, guys. With the yen, I'm really excited about this trade. I'm going to watch 109.37 all day today, and I'm gonna initiate my trades depending on what the price does around 109.37. And of course, these recommendations are the key for today's trading, my own trading on the dollar yen. Okay, now in the chat I have asked you, I said, let me know if you need any market analyze, and I will do that with a smile on my face. Now, Michael is asking for the Aussie, and I love the Aussie, Michael. I'm going to do that immediately. Another comment that I wrote to you guys was this: who here thinks they have enough knowledge of the wave principle? Do you guys want us to dedicate a week-long event to explaining and education of the wave principle, or as a lot of traders call it, Elliott wave? So do you want us to do that? Let me know in the comments, and of course we can arrange that with FX Educast and our generous sponsor QTime FX. Of course, they want you to know how the market moves. They want you to understand more and more about technical analysis and analysis theories of the market, so you can build your own strategies and make money. We want you to make it, guys. That's why we are having these webinars day after day. We want you to see the best opportunities in the market, so you can join the fun that we are having with trading these pairs. Yesterday, of course, we issued many signals. Only one of them was triggered. Actually, two. The euro long position was, or long recommendation was triggered, and unfortunately, it did not move. The market did not move. We closed it very close to where we opened it, with no profit or loss, no significant profit or loss. On the other hand, the long position on the pound was the best trade for yesterday. It made 46 pips. We don't have any stops hit yesterday, any trades that went into the red, so it was a pretty good start for the week. I'm hoping for the same today, another 40, 50, 60 pips today. That would be fantastic. And I'm going to try my best to do that every day this week. So with this, guys, let me know if you want us to have a week-long event just talking about Elliott waves. I'm going to teach you about everything, the rules, the guidelines, the wave personality, and the types of waves, of course, including the many types of corrective waves. So if you want that happening, let us know, let me know, let FX Educast know that you want an Elliott week, and we are going to have an Elliott week if we have an interested audience in that specific theory. For now, I'm going to continue looking at your comments, looking for answers for my questions that I asked you about the market and about Elliott, and I am going to respond to a request from Michael to analyze the Aussie. And immediately, Michael, yes, sir, I'm gonna do that immediately. The Aussie. Sometimes the Aussie and the Kiwi are very, very exciting. And maybe that time is now. So we are going to look at the chart starting with the daily, and I am going to use my indicator template. It's with a split second that you see weakness. You don't need to spend much time on the chart to see weakness. And I'm going to explain why. It's been a while since we talked about the Aussie, but with coming back to the Aussie chart today, let me just start with the daily, and then we'll continue talking about other time frames. On the daily chart, as you can see, we have been dropping for 3 days straight after having a period of horizontal trading here, not a lot of action. Now with this strong day to the downside, the bears are taking control of the market, and we have small modest attempts to push the price even lower than that. We are still on the daily chart, although the stochastics is pointing to the downside, the RSI is pointing to the downside, and the price itself is moving to the downside. We are still above the moving average band, and that means, of course, that we can still find support at the moving average. Now, if the moving average band is done, then this pair is done, because we already have weakness signs on the indicators and on other time frames. I'm going to show you how weak it looks on the hourly chart in a second. But first of all, what I really want you to see is how close the rising trend line from October 2nd low is to the moving average band. The trend line itself is at 68.20, something between 20 and 25, while the moving averages, as you can see in these numbers, at 17 and at 11, 18, let's call them 18 and 11. So between 20 and 11, we have an obvious support area. So support at 68.11 to 68.25. Now, we are not very far from this area because we're trading in the 30s right now. So I really want you guys, if you are interested in trading this, Michael and everybody else, I want you to watch what will the price do when we get here. If we find a low, if the daily low is within this area or very close to its limits here at its borders, then that can be followed by a move to the upside. But once we break below the bottom of this area with a good number of pips, and for the Aussie it does not have to be 30, 10 pips is enough, because it's not a volatile instrument. and its price is much lower than other major currencies like the euro and the pound. Because of that, 10 pips below the bottom of this area is enough. So I really believe that getting to 68.01 is a good reason to go short. But this is the first observation. Now, what does the hourly chart say? Just look at this weakness, guys. I wish we saw this earlier, because the close of the previous hour is a sell signal. Why is that? I'm gonna let you know after I see what price we closed at. 68.50. 68.50 was a sell. Okay, now we are only 10 pips below that, and now we are looking for confirmation of breaking below this rising trend line and the moving average band on the daily chart, which of course is 11 to 25. So with the failure here at this moving average, with this type of failure, just look at this. The price is moving to the upside. It is attempting to recover. Here, horizontally, it got to the moving average band. Can you see this, Michael? Can you see this, guys? It touched the moving average band and then it dropped again. Just a few pips inside the moving average band and then down again. Touching the moving average band and down, and again. Here it is trying to push beyond the top of the moving average band, but it did not work. And again, the price started falling. Not only that, guys, with all these, with here the failed attempt here, we did not get a really interesting signal from the stochastics, for example, or the RSI. And again, here we do not have the blessing of some of the indicators, but here with this failure we do. Look at this cross of the fast stochastic below the slow stochastic, especially that we were very close to the overbought area, is of course a reason to sell. Again, the RSI came to that equilibrium level, the 50%. We were at the 50%, and then we started falling again. You see this change in direction, the RSI, and the cross in the stochastic, and the failure at the moving average. Guys, there is no way to unsee this. Everything is pointing to the downside with this thing. So I'm going to short it with a strong heart if we break below, of course, the support at 11. Let me switch to the daily chart. Maybe we can get earlier than that. Let me see. So actually the break below the trend line itself, under such circumstances, the strong reading on more than one indicator to the downside, all of them are pointing to downside. Moving average on the hourly chart, stochastics on the hourly chart, RSI on the hourly chart are giving clear signals to the downside. Maybe with that we can get earlier. I'm hesitating to tell you the truth. What if we get just below this trend line, maybe 10 pips below this trend line? That would make it at 16 instead of 1, or 15, sorry, instead of 1. And I'm gonna stick with trading below 68.11, but I'm gonna make it only 5 pips below 11. So my recommendation for now is going to be a short sell at 68.06. Let's see where we can place our stop and limit. 2 targets. I love giving only one limit, guys, but I know that some of the traders love having 2 targets and taking control of their account according to these 2 targets. When some of the traders that I meet, they say, well, we prefer 2 targets because, yeah, we believe in your analysis and we want the opinion of an experienced trader, but you give me two targets and I will see once we get to the first one if I want to close or not. Maybe the market is going strong, it's penetrating through the first target, so if that happens, I want to be keeping my position. I don't want to get out at the first target, and I want to aim for more profit. So I will be the one deciding if I want to close with the smartest profit or not. And I have no problem with that, of course. If you want to do that, go ahead, no problem at all. That's why I'm giving you guys, I've changed a little bit because I used to give only one target. Now I'm giving you two because of the request of more than one of the viewers who were talking about that having more targets make it easier for them to trade. So let's see. Where can we place our stops and limits? I love this chart. I love this chart so much. I want a chart that another chart for the Aussie. Okay, guys, so where is my stop? If I sell at 06, where is my stop? One of the things we can use is, of course, the trend line, the falling trend line. And we can also switch to the 4-hour chart to see where is the moving average band. Yes, things are getting clearer now. We can also use the retracement levels for the last part of the drop. Use every tool that you know how to use in your attempt to spot the most important resistance or support level. So I'm going to take a look at these levels and see which one I like most. Today, the falling trend line from the top seen on the 5th of the month, exactly 1 week ago, is running, or currently it is running at 68.97 with a drop, of course, of this trend line with time is going to drop. That's why it's going to get closer and closer to the 71.4 retracement level, which is at 68.90. So 68.90 is really key now, and I'm going to keep this as my resistance, 68.90. So what do we have now? We have the resistance. $68.90. Let me use another color for the support and resistance. Okay, so my stop should be 10 pips above that. Usually, you know, when I trade the Aussie dollar, the stop is not this much. This is 94 pips of a stop. It's usually less than that, but under the current market conditions, with the support and resistance being where they are, we cannot do with 50, 60 pips of a stop loss like we usually do with the Aussie. So this is a little bit of a larger than usual stop. It's going to be, as you can see, guys, 94 pips. Now let's look for the limits, the two targets. If we break below this rising trend line, and of course the moving average here, if we start trading here, we initiate short position, and this short position will be expected to dig deeper to the downside and to continue what the bulls started earlier, sorry, the bears started earlier last week of pushing the market to the downside. 68, of course, that's very close, very close, very close. So with this break of the trend line, the recovery attempt will be announced as a failure, and of course with that we can easily drop back to this level, 66.72. I'm going to use that as a second target, 66.72. Yes, I'm going to use it as a second target, 66.72. I know you guys like your smaller targets, so I'm going to give you a small target here, something in around 40 pips or so. That means we can also use the retracement tool here and look for 67.44. Well, yeah, 67.44 looks 45 actually it is. It looks like a good target. 67.45, yeah, or 66.72. This is the sell signal on the Aussie. I hope, Michael, you are liking this analysis. I'm trying my best to give you a good Aussie dollar analysis. Now, buy at 69, of course, with a stop at 68.06. It's a reverse, of course. Now, what about the targets? Target 1, target 2. Target 1 is, or supposed to be, a small target, as you guys like. I'm going to look for something in the area of 40 pips or something like that. 5, 4, 3, 2, 1. Okay, so I'm going to focus on the last 5 moves or waves, if you like, and see if we have something the 50% retracement for the last 5 moves to the downside, although we have some kind of overlapping here. I'm still gonna, yeah, maybe it's better to use the retracement starting from the top that came after this unbelievable, unforgettable flash crash that I hope you guys remember, and I hope you did not lose anything in this very fast move to the downside. It was a rough night for a lot of people. I remember it. I remember it very well. So the highest price after reaching this flash crash was 72.95. From there we started dropping until we recently reached 66.71. So the retracement levels for that are, let me use the 38.2, if that, no, it does not work. So I'm gonna go with this retracement, guys, as an initial target, the retracement for the last 5 moves. We have the 50% level at, as you can see, 69.39. The red retracement, I'm gonna remove it in a little bit. I just want you to see that the retracement for the last 5 moves to the downside is at 69.39. That's why I am going to use 69.39 as my initial target. 69.39. 39 pips. I know it's not a lot of profit, but some traders like it that way. And you know, when you collect 30 here, 25 there, 35 there, it adds up. You know, you can make a lot of profit collecting 30 pips here and there. And I really hope that you do, guys. So this is the initial target. My second target is going, I want it to be more than 100 pips. And that means, of course, above the 50% retracement level. I'm looking for, well, the closing price for the flash crash day was 70.05. And this could be a good target. I'm still looking, guys. I'm thinking out loud. Yeah, I like this. 70.05. We also have here two daily lows very close to 70.05. And yeah, here we have daily highs that are very close to 70.05. So I'm going to use 70.05 as my second target. Okay, so this is it for the analysis and recommendations of the Aussie as requested by our good friend Michael. To sum up, what we found out on the chart of the Aussie dollar is that the resistance is currently at 68.90. Support is between 68.11 and 68.25. Once we start trading below this support, even with 5 pips, we did not wait a lot. 5 pips below the bottom of this support, we initiate a short position, as you can see, 68.06. 10 pips above the resistance, we place our stop. Unfortunately, the stop is 94 pips. I would like it if it was less than that, but we're going to update that 24 hours from now. Of course, tomorrow we're going to talk about it again, and we are going to find if we can use smaller stops. The initial target is 67.45. That of course leaves you with what, 61 pips, and the second target is much larger than that. It's 66.72. Now if we break, of course, the overall technical picture is weak. It is weak in the price itself. It is weak when you look at the indicators. Moving average, stochastics, RSI, everything is pointing to the downside. But of course, you know, this market. There are no guarantees at all that it's going to move to the downside. We are still, that's why we are going to wait for a break below this rising trend line. I don't want to sell here, just ahead of a trend line, guys. Just ahead of a rising trend line is not a really good place to sell. So if we start trading below this trend line, I want to be short. But if we don't, I don't want to be short. You got me, guys? This is very important. Current levels, although the hourly chart looks weak, but when you take a look at the daily chart, we have a trend line and moving averages here. So this is support area. I don't sell above support area, just above support area. Support area is between 68.11 of course and 68.25, and now we are around 68.40, 39. So we're just above that support area. Selling just above the support area, of course, makes absolutely zero sense. That's why I will not sell here. Okay, guys, please focus on what I'm saying. I'm not going to sell here. I'm going to sell in case the price starts moving below our support area, 68.11 to 68.25. Even with 5 pips below the bottom of that area, I am going to take my chance and short the Aussie dollar. Okay, now there are absolutely zero guarantees that we are going to move to the downside, although the hourly chart is really weak. And that's why, of course, we have another plan. If the price keeps on moving to the upside and we break the resistance 68.90, we want to be long. So 69 figure, we buy. Our stop is, of course, below the support area that we have been talking about now, 68.06. And initial target, it's a small target, 39 pips, 69.39, while the second target is a little more ambitious. It's a little more than 100 pips. And it is at what looks like a previous support and resistance area that deserves our attention, 70.05. So with this, guys, I can't believe the 3 hours are over already. We're done. Another webinar that I really hope you guys enjoyed. I really hope that you are going to follow these trading recommendations. I know some of you guys, the new guys, are going to follow it on maybe a demo account. The more experienced traders are, of course, gonna follow them on a real account. In both cases, I want you to follow the market. I want you to follow these recommendations, and I wish you the best of luck. Just like yesterday, we made profit. We made good profit yesterday. I really hope we do the same again today, and when we come back tomorrow, we'll be talking about the profit achieved today. Who knows, it could be the short Aussie dollar or the short dollar yen, or maybe a long position on gold. Who knows which of these recommendations that I gave you today is going to be the best one, the most exciting one. That's why you need to follow the market. You need to follow all the pairs that we have been talking about for 3 hours right now, and use these opportunities to your favor. So guys, thank you very much for being here. It is really a great pleasure to spend another day with you. We're going to meet again tomorrow in 21 hours for more trading opportunities, more trading setups, more technical talk, and of course, more of searching to achieve profit for you guys. We really care about you. FX Educast really care about you. QTime FX really care about you. And of course, me, myself, and I really care about you. I measure my success by how much profit you make out of my recommendations. When people are making money on my recommendations, I feel great. When we have a rough day or maybe a rough week, it happens, of course, then I feel bad, and I do my best to compensate for that in the next day or the next week. So we are doing great so far this week. I hope the good luck will continue, and we are going to achieve more and more profit until the end of the week. That's why I want you to be here every day, tomorrow and Thursday and Friday, and we are going to make profit every day. Okay? So keep fighting, keep looking for these great opportunities, like yesterday's long pound position, immediate target hit in less than 1 hour. I love that. I really loved it, and I'm very happy. I'm very happy for you guys because of that. And I hope that today one of these recommendations is going to do the same thing, and we're going to hit its limit in no time, in an hour or so. That is very exciting. I love that when it happens to me. And tomorrow, 21 hours from now, we're going to meet again with new trading opportunities for you guys, so you can make profit, so you can achieve the kind of profit that you wish to achieve. And of course, to achieve good profit in this market, what you first of all need is a good broker who makes it easy for you. You don't want to be trading with a broker who is making the process of achieving profit harder for you. How can you achieve profit if you have wide spreads, if you have a lot of commission? Even if you have a great strategy, a lot or a large part of what you are going to achieve is going to go in the pockets of your broker, while you end up with only a fraction of the profit that you should have made. But not with QTime FX, guys. QTime FX loves you, and they want you to make profit. That's why they are offering you to trade with very, very tight spreads. 0.4 of a pip on the euro dollar and dollar yen, and similar tight spreads on other major currencies and other trading instruments. And not only that, of course, we give you the tight spreads, but we don't say, hey guys, we gave you tight spread, now give us some commission. No, 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 no. We do not do it like that. We are giving you the tight spreads, and we are giving you the fantastic option of trading without commission, so you can enjoy the tight spreads. You are the one making use of these tight spreads, not us, the broker, not QTime FX. And that is a wonderful, wonderful deal that QTime FX is giving to each and every one of you. Not only that, we are encouraging you to try trading these unbelievably beautiful and attractive spreads. I feel I'm talking about a woman here, not spread. So it is beautiful and attractive. Yes, I'm talking about spreads, not about a woman. Come join the fun and trade these spreads. If you are finding it, if you are thinking about it, if you are finding it, thinking about it, you are trying to find the right thing to do here, we are encouraging you to do so with a fantastic and very generous free bonus of $500, guys, of real green money. Not trading credit, not just a number in your account that you can never get away with, you can never withdraw. No, 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 no. It is real money, guys. Real money. Okay, it's a withdrawable bonus. How you like that? So come on, open your account with us. First of all, you will be supporting these free webinars, and then you will be using extremely attractive spreads. Zero commission, no commission at all, and on the top of that, a very generous bonus. So contact us, FX_educast via Telegram. Let's open this account for you today. Love you all so much. This is the end of today's webinar. See you again 21 hours, guys. Keep focusing on the market. Keep trying to take the best out of the market, making the best trades, and I really wish you the best. As I always sign out with, good trading and good luck. See you tomorrow, guys.